I think the commercial real estate issue is something that is continuing to get worse. The San Francisco address 400 Montgomery Street, a building that just sold for $77 million just recently, was in 2019 is expected to sell now for $26 million this month. So it went from 77 million to 26 million in a very short period of time. There is the largest mall in Maryland called the White Marsh Mall in Baltimore County, had a valuation of $240 million at the beginning of the decade. Once was valued at $320 million in 2013, and is now has a valuation of $80 million. The Brookfield-owned gas company tower in downtown Los Angeles, a $400 million valuation a few years ago, recently valued at $214.5 million. It was appraised 3 years ago at $632 million. You're seeing commercial real estate absolutely crater. And I think that is where you're going to see the banks run into trouble. And I wonder, does that have anything to do with Warren Buffett selling $71 million worth of Bank of America shares? And so stockpiling cash, waiting for value. He's the greatest value investor. He's loaded up on cash as we continue to see commercial real estate problems in the banking sector. All of these problems, they are not going away. And Warren Buffett certainly is someone to pay close attention to. 65% of the country is living paycheck to paycheck, and even more frightening than that, 40 to 45% of America, people earning over six figures, over 100,000 a year, are living paycheck to paycheck. And yeah, it's a situation that's getting worse because we're not seeing wages keep up with inflation, because inflation, we're being lied to about the numbers that are inflation. And when you talk about inflation and the numbers that the CPI comes up with, it's interesting. Maybe the biggest expense to working age people, kids, and anyone who's working, is not listed in the CPI, and it keeps going higher and higher, and that's taxes. So between taxes and rising costs and a devaluing dollar, yeah, it's a doom loop that you're right. The American dream is becoming further and further away from a lot of people. And when you realize that the largest asset of our government is student debt, yeah, you have a whole generation of kids coming out indebted up the yin yang, with really a very difficult challenge ahead of them just to get out of debt. And you know, there was some interesting revelations that came out of some interviews that Chris Marcus has done recently, and Vince Lanci, with some mining executives who are talking about the fact that China is buying unrefined silver concentrate from Latin American refiners and miners. This is something that's really rarely, if ever, done, and it is typically only done in times of very acute supply-demand imbalances. It's the way they talk about it. And that they are way overpaying by many, many times the amount that for each ton of unrefined silver that the West would pay for it. And they're bringing it home to China, refining it there. It has no impact on the price of silver. I think it gives pause in terms of future price, in terms of where we are ultimately going. Yeah, the central banks and the commercial banks, rather, are still in control, but it's becoming very dangerous. And you're seeing the bleed down in all of the exchanges. We've talked about that. You're seeing the import numbers, but you're also seeing something like this, that it isn't very easy to see this. And I certainly appreciate Chris sharing this information with me, but that they're paying as much as $200 a ton more for each load of the material. That's on a per ton basis. That's a lot more. And they are refining it themselves in China, similar to the way that, China said they weren't accumulating gold during the last few months, but they were, and they're buying it through proxy banks that work on behalf of the PBOC, who don't report it to the IMF. These countries who are using the suppression of the Western paper market against us they're not causing a stink. And why would they? But what they are doing is standing for delivery and taking it any way that they can. We saw more of the same. The managed money get fleeced again. And one of these days, it's not going to happen. One of these days, the commercial banks will be on the right side of the trade. Maybe that's where they're going right now because there's such insatiable demand, physical demand for delivery. To be on the wrong side of that trade at the wrong time is a death sentence. And one of these days, I think they will hoodwink the managed money into going short. And that's kind of what you see right now, where almost 5 billion in long futures were sold by the managed money here last week, and almost 2 billion in silver futures sold. We'll find out more, I think, tomorrow with the COT numbers. It'll probably be much bigger than that. But what you are seeing is what we've always seen. The commercial banks allow the price to rise. They absorb all the buying pressure. They suck in all the speculators, and then they step on the price and lean on it and lean on it and lean on it after they've absorbed all the buying, and they rinse, wash, and repeat, and you end up fleecing the managed money who capitulates. But one of these days, when the managed money gives up, goes short, and sells all their longs, that means when they go short and sell their longs, the commercial banks take the other side of both trades, both of the short trade going long and selling their longs to the commercial banks. And that's what will happen. And I don't know when that will be, but I think that what differentiates this time from all the other times is that we're seeing such a massive bleed down. You look at the LBMA numbers, they're down to the lowest level they've ever had since they started keeping records. And it's just a matter of time before the deliveries continue to, I think, create a problem where being naked short the amount that they are is about as foolish as it can get. So, yeah, I understand the frustration. It's still much higher than it was a year ago, but breaking that 30 barrier, I think, was a gut punch to a lot of people. Ultimately, it will retest those numbers again. And ultimately, the West and the rigging banks, where 8 banks right now hold the largest concentrated short position in the history of the COMEX market in any commodity ever traded, a la that chart that Ed Steer showed, which I've got a lot of mileage out of. That speaks volumes that they're still in control. But maybe, just maybe, they're trying to slowly get out of that position, go long and make more money on the upside by hoodwinking the managed money than they ever did on the downside, and with a lot less risk.
Yeah, Andy, another story that came out that I just started going through this morning, but something that we talked about recently, where the public numbers from China indicated no additional gold purchases, although Jan Nieuwenhuis, who does some great research and actually got to meet him back in 2013. So
he's one of the best commentators out there. He has my tremendous respect.
Yeah, and we hear him mention here that the custom data reveals that the People's Bank of China, did continue to buy gold in May, even though it had communicated to the market that it had discontinued buying, and they were buying at a rate of 53 tons. So you can find that on Gainesville Coins.
We've been saying that. We said that all along. I mean, when their commercial banks,
you did say that clearly when that
yes, and when their commercial banks buy on behalf of the PBOC, they're not declaring it to the IMF. When they buy from the refineries in South Africa and in Switzerland, they're not declaring that. When they buy gold that's under 995 pure, they're not declaring it. And why would they? Any more so than why would we? And we haven't. No one knows how much gold's at Fort Knox. Ron Paul's tried to audit it twice. Why won't we tell anyone? That's rehypothecation. That is fractional reserve. That's Bernie Madoff's scam. And it works until everyone stands for delivery, which we are seeing. They are using the suppression of the paper price, they being the Chinese and the Indians and the Saudis and the Russians, and by proxy through sovereign wealth funds and whatnot, to stand for delivery. And they're draining the exchanges. When we look at the COMEX, oh, by the way, gold, they say they trade 20 million ounces per day, but at a 10 times factor, that's 200 million ounces a day that they're trading. Really? No, that doesn't work that way. And on COMEX, the silver market right now is 1,500% rehypothecated, which means that if 16 people have a contract or 15 people have a contract, if they're lucky, one will get the silver, the rest would be cash settled if they all stood for delivery. It's a Ponzi scheme. And so by selling the same ounce of gold over and over and over and over and over and over and over again, knowing that maybe 1% of contracts have ever stood for delivery, that it's a way to hedge risk without standing for delivery, the sophisticated central banks and sovereign wealth funds in the East understand that's the Achilles heel. And so they've been standing for delivery, where massive amounts of gold and silver are fleeing the Western vaults. How the BIS, we don't know that they told these central banks of Europe to accumulate gold and repatriate it, but I find it very ironic that out of nowhere, after selling gold forever, they all brought their gold back. They buy more gold the next year in the 60 years combined, more than the 60 years previously combined, and then double that in 2019, only to find out that gold was reclassified tier 1 miraculously. And then they've not stopped buying ever since. So keep that in mind as we move forward. The second thing that came out of this meeting, on top of 59 countries deciding to come into the fold, along with the Royal Crown Prince saying, I'm not going to go to the G7, but we'll have presence at the BRICS meeting, big deal, was two meetings on the sidelines as identified by Dilma Rousseff. Dilma Rousseff, Peter, it was the former president of Brazil, and she is now the head honcho at the BRICS New Development Bank. Let's just call that similar to the IMF, only for the BRICS. And she said a couple of things that are very, very, very important. She said she had two meetings with Putin and Glaziev, the architect, and that in principle, they have agreed to a new settlement currency called the unit. And in principle, the unit would be traded over Project M Bridge, right? So that's the interesting thing, is that this is the first we've heard of anything. And she said that in principle, we have agreed to a basket of commodity, or a basket of currencies representing 60% of the new unit token, BRICS plus currencies, and a basket of gold. Not commodities, as Glaziev had originally said, but gold. And my feeling is that it would be very difficult to have a basket of commodities when you have all sorts of factors involved in terms of commodities, and things that go bad like wheat, and things that are very variable. So I think it makes great sense to have chosen gold to represent the 40% backing in the basket of the unit, because it is the only other tier 1 asset as mandated by the BIS. And all of these countries, the central banks have been buying it hand over fist and repatriating it.